If there's a question that is spoken or unspoken, but is likely on everyone's mind, it's this, succinctly. Is the bottom in? Are we going to see lower lows? Is this it? Was that the worst of it? And here's the truth. Nobody knows. Trading is a probabilistic game. We can always say it's more likely than not, or it's less likely. So this is where I'm going to show you the evidence that leads me to believe that the worst of it is over. And selectively, we can start looking to the long side. Now, in the premium video, I got into what I call the 1 hour solution for this current environment here at the end of March, before that core PCE number, which is going to be an important one. And as we're going into Q2 with a slightly longer term time horizon, after we've seen 10 and 20+% pullbacks where someone with a time horizon of 6 months to years could really benefit from these blue light special sales that have been happening. So we're really talking to two groups of traders. We're talking to traders who are more active traders, swing traders, traders with, say, time horizons of a trade being open of less than 3 weeks. And then we're talking to another group of traders whose time horizon is possibly years, right? So let's get to it. The mid-month drift in March is up. We're slowly seeing many sectors having started their drift higher into end of quarter. What does that tell us? That tells us that money is being moved into these particular corners of the market. Not everything. Some things are struggling. Staples, I would say, are struggling a little bit. You could also see that basic materials haven't really benefited. Utilities are not benefiting. So there are certain sectors that are not enjoying that drift. What's drifting higher? Slowly. You can see semiconductors drifting higher, industrials drifting higher. You can see oil services drifting higher. So there are certain parts of the broader averages, if we break them down into sectors, that are indeed drifting higher. All right, so when enough of these are drifting higher, that tells us then that the broader averages, the S&P, the NASDAQ, the Dow, the Russell, are drifting higher as well. And we know this to be true. While many of these daily time frames are very much in downtrends, the 1 hour solution is shorten the time frame, take overnight risk, but focus on the 1 hour trends that have organized in the last 1 to 2 weeks of this mid-March drift higher. The other solution is take advantage of the moves on the weekly time frame where there's been at least a 10%, if not 20% pullback within overall bullish, preferably uptrends, bullish markets, that this represents something valuable, hence either bullish or in an uptrend, on sale, down 10 to 20% from the all-time highs. So those are two ways to manage right now. Why would I say that we're more likely to, that most likely, I hate saying this, the bottom in, right? But is the worst of it over? This is where I would say yes. So first of all, I showed you that mid-March drift and the participation across multiple sectors. Let's do something else. So let's take a look at that Koyfin chart one more time that shows the relative performance, the mid-month drift, and look at some of these sectors near the top of the list. XLE, XME, and, well, we'll grab GDX. So what I'm going to do is show you some flows. This is the XLE. Let's start there. By the way, that's OIH, oil services. This is XLE. And what I'm looking at is the last 5 days, even the last month, have we seen general flows higher, right? XLE, not so much. OIH, yes. What about GDX? So what I'd like to see support some of this mid-March drift is actually money flowing into some of these, right? And we're not seeing a lot of that. March 20th, March 21st. Okay, so not a lot of that there. What about semiconductors? Take a peek here. So this could be, it's spotty, right? Some of these we're seeing some flows and some of these we aren't. So it's not as easy as saying just because it's drifting higher, it's going to benefit from follow through. But if I can see the drift coupled with positive fund flows, definitely something to keep in mind. And ultimately, we will also want to remember, and I guess this to me is sort of pulling the rabbit out of the hat. Is the Federal Reserve going to cut rates? This is almost a Band-Aid for everything. Cheap money solves a lot of problems. And Central banks around the world have used monetary policy as a way to shore up weak equities. Take a look at June 18. 61.5% expectation for a rate cut. And then this right here, 6.6, I would just add this here because that is the expectation. So just about 68% that we're going to see a rate cut in June. Now, if we go out to July, it's far higher. It's 49% plus another 29% plus another, call it 2.5%. Rates are going to be lower in July, whether they're cut a quarter point in July or whether they're cut a quarter point in June and then in July has to do with why there are so many columns on these graphs. If we're going to get the first rate cut, you can see here that would bring us from 4.25% to 4.5% down to 4.25% to 4 to 4.25%. That represents 25 basis points lower or a quarter point lower than where we are right now. That's most likely. The reason this isn't at 100% is because then the expectation spills over into the second most likely scenario that at about 29% expectation, we've already seen a June 18 rate cut, and we're going to see a second rate cut on July 30th. And if you're wondering, what about May, Rag? That's expected to be a hold. PCE is coming up this Friday at 8:30 a.m. And if any major decisions are going to be made about these expectations, which makes that hot zone a huge one, that's going to be Friday morning. And if that is cooler or flat, these expectations should be in line. If it's higher, hotter, this could disrupt. And probably what it would do is push the June 18 rate cut expectations out into July. So we would just end up with this pause in rate cuts till mid-summer as opposed to early-ish summer. And that's where we are. This is the evidence that we're slowly starting to see a bottoming process coming in. End of quarter allows folks who move a lot of money around, your asset managers, your big banks, big funds, big money, right? This gives them an opportunity to say, look, we've got 10 and 20% pullbacks. How often have we seen this lead to movement higher over the next 2 and 3 quarters? There's going to be a lot of opportunistic buying happening. The tariff narrative is softening its edges. It doesn't have the same shock value it had even 6 weeks ago. And as long as the Federal Reserve is here to save the day, like Mighty Mouse, I guess that we have to start calling Jerome Powell Mighty Mouse. And that's the way I'm going to be looking at price action into April, which is going to be here in just a week.
Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.